I'm Andrew Brown and welcome to the PowerPoint presentation of the Mining and Commodities Investment Fund. The entity that is the investment manager of the fund is Brown & Company. Brown & Company is made up of myself and Scott Braithwaite. The fund was formed in February this year and entered the market in late March and performed strongly. Global markets have since traded down on the back of European debt fears and the stalled US economy. The fund's performance has been buoyed in the recent downturn by the takeovers of the copper producer Equinox Minerals by Barrick Gold in April and the offer by coal seam gas producer Arrow Energy for the coal seam gas assets of Bow Energy in August. The continuing urbanisation and industrial capitalisation of China is sustaining high demand for resources. High demand plus constrained supply is creating high long-term commodity prices, which in turn is leading to industry consolidation. The fund invests in mining and energy companies that have strong management teams, strong balance sheets, and increasing production to enable shareholders to fully take advantage of higher long-term commodity prices. A second consideration of the investment strategy is to invest in mid-cap producers that would make a suitable acquisition for a larger player to allow shareholders to benefit from the potential controlled premium of a takeover offer. There are two directors of Brown & Company, myself and Scott Braithwaite. I have a law degree and a business degree from the Queensland University of Technology in Australia and have passed level 1 of the Chartered Financial Analyst course. I have financial markets experience with a subsidiary of JP Morgan in Australia and Goldman Sachs in London. Scott has a Bachelor of Economics from the University of Queensland and is primarily the marketing manager for Wellard's Live Export. Other key people in relation to the fund are Kevin Tan, the fund accountant, and Jenna D, my personal assistant. The fund is an exempted company incorporated in the Cayman Islands as a mutual fund. The fund reports in US dollars, although shares in the fund can be issued in any major currency. Broking services are provided by Interactive Brokers. Custody of the shares is held with ABN AMRO Sydney. The fund banks with DBS Bank in Singapore. The administrator is the Portcullis Trust Group Singapore office and the auditor is RSM Singapore. The fund administrator is an independent third party that maintains the accounting records of the fund. The administrator also prepares and emails the monthly net asset value statements and calculates all fees and accruals. The fund has a single security limit of 20% of the net asset value, a gross exposure limit of 150%. Minimum investments in the fund are $100,000 and additional investments are in increments of $50,000. Accounts may be withdrawn down to a minimum balance of $10,000. Both the manager and the administrator are required to sign fund transfers. Inflows and outflows occur on a monthly basis. Settlement is the trade date plus 10 days. The initial charge on inflows is 1%. The MER is 1.25%. The performance fee is 20% and the hurdle rate is the Reserve Bank of Australia cash rate plus 2%, so 6.75% currently. Dividends are reinvested and will be reflected in the value of shares, and the fund is not taxed. Profit share is offered to advisors of 1% of the investment where the fund performs in excess of 10% per annum. To qualify, the investment term must be equal to or greater than 12 months. The payment will be made to any nominated bank account. Despite the global economic concerns, commodity prices are remaining strong. Sustained demand from China plus constrained supply are seeing the likes of copper, iron ore, and coking coal trading at elevated levels, with gold receiving a boost from the lack of confidence in world governments. With ever-increasing developmental costs and constrained supply, the major mining companies are increasingly forced to redeploy cash in acquiring mid-tier producers. By positioning in the mid-tier producers, the fund aims to benefit from the control premiums potentially on offer. In 7 months, the fund has benefited from the takeover of Equinox Minerals and the offer in place for Bow Energy. PricewaterhouseCoopers released an industry briefing in 2010 entitled M&A in the Global Mining Sector No Stone Unturned. The headline-grabbing quote from the briefing is, quote, "As the potential for commodity scarcity escalates, M&A activity in the global mining sector will likely resemble a global arms race." With signs that some frontier countries are becoming protectionist in relation to mining assets, such as Venezuela, Zimbabwe, and the rumblings within South Africa, this view appears to be playing out. Links to both the 2010 and 2011 PwC briefings can be found on the website. In summary, the fund offers exposure to China and the global competition for resources, but is limited to Australian sovereign risk. Both directors are invested in the fund. The fund offers safety with independent third-party administration, ease of use,
and profit share for advisors.
For any queries or questions, please don't hesitate to email me. I'm Andrew Brown. Thank you very much for your time.